Studio economist Ken Gishinga to talk about the impact of these taxes on businessmen, and not only just businessmen and businesswomen, but everyone in general. Now, Ken, thank you very much for joining us today. And I believe that, SMEs are going to be hit really hard, as we've been seeing with taxes. You've got the housing fund contribution, you've got goods VAT, capital gains tax, and so much more. What are some measures they can take to survive, if any?
Thanks for having me, Malika. I think yesterday was a difficult day for most Kenyans. I think what we saw in the debate, we saw a very contentious debate around the VAT tax. Obviously, for anybody who's an SME, even a corporate, for them, that's a difficult day because the cost of doing business goes up, whether you're a startup, whether you're an SME, or whether you're a corporate. So I think all across the business community, it was a difficult day to digest.
All right, so how far will these negatively affect the entrepreneurial spirit of Kenyans?
You're absolutely right. Anytime in economics, you're told anytime you introduce a tax, that's a disincentive to enterprise. Anytime you introduce a subsidy, that's it's often considered to be an incentive. So I think for most people, and you saw from the interviews that was screened earlier on, the anger is really palpable.
Yes. And
most people really feel MPs would have done a better job in trying to defend a lower cost of doing business regime in Kenya.
Well, it was absolute chaos at the parliament, as we saw. But as we speak of that, did you know that the Petroleum and Mining Cabinet Secretary John Muniz said that the government has set aside 2 billion as seed money for liquefied petroleum, the LPG project, Mwananchi gas project, and they want to encourage Kenyans to use gas in the kitchens as opposed to kerosene and firewood. How far would this be considered counterproductive now that we've already seen them put Kenya shillings 18 additional on the kerosene per litre?
That's an interesting point because the first people to call me yesterday were actually LPG distributors who wanted to know whether LPG is considered a fuel product that's going to be under the VAT, and they really wanted to have some clarity because, as you say, the petroleum, the energy minister has promised to encourage that subsector because it's good for the environment. If less people cut down on firewood, if less people use firewood, obviously more people use LPG, it's good for the economy, it's good for the environment. So yeah, there's a sense that yes, there's almost a double speak here, where you're almost taxing one hand, but all then subsidizing the other hand, and net, it's not very clear what direction you want to go.
All right, now let's take a look, of course, at the figures that we have here. Import duty to 25%, excess, that is imports exercise at 20%, capital gains. All of these, who will be hardest hit?
I mean, as I said earlier, obviously it's the businessman, the entrepreneur, because not only, especially the ones who are importing items from abroad.
Yes.
Because not only are you facing a 25% as soon as your goods get to Mombasa, but also you have a VAT that's going to meet you as soon as you begin transacting. So I think it's the ordinary SME who's going to be, especially the one who is importing goods. A lot of people will argue, is that a good thing? Because that will reduce imports and will maybe support our local industries.
Yes.
Maybe that's a good point, but we also have to recognize that there are some goods that do not have a local alternative. You have to import them. Some of them are drugs, for example, where you don't have a local pharmaceutical option to do that in the current setup. So I think it'll cut both ways, but I think for me net it's really the ordinary SME who will be the loser at the end of the day.
So they will have to find a way to survive then after all of these, as we see now. Bank transactions, it's hitting you whether you're at the ATM, right, whether you're using your mobile, whether you're using your checkbook over the counter. What do you think that is going to do to the banking sector?
I find that a bit strange because financial inclusion is the name of the game today. We really want to get more and more people to be part of the financial sector, and banks act as an intermediary. But the moment you start introducing very many taxes, you actually start doing what is called disintermediation, where people start moving away from the banking sector, people start putting money in their own homes, and which is not very good for the economy because money stops circulating across the economy. If money is in your home, it means the bank can't use that money to lend to somebody else. So they have to be very careful with the taxes in the financial services sector because the current thinking is we need to get more and more people in the financial sector, and that is a disingenuous way of going about it.
So do you think then it's going to affect spending power and we might end up in this vicious cycle?
Absolutely, because anytime you increase tax, you increase the cost of living. Remember, the wages have remained flat. They have not moved. Salaries have remained flat.
Yes.
So it means people have to start choosing on what to consume and what not to consume.
Absolutely.
If you are going to downtown 5 times or driving to downtown 5 times a week, such a person will say, I'll go once or twice a week. So the activities that you would have done in a week obviously reduced by a fifth or by 2/5. So net, if everybody does that in the economy, we definitely see the economy growing at a much slower pace. And remember, Malika, we are trying to target 7% GDP growth. And with this kind of taxes, it will be very hard even to hit 5.5%.
So we're going to be hard-pressed to find those percentages adding up clearly. Now, as we see dividend tax at 5%, advanced tax at 3%, withholding 5 to 25, and chocolate consumption has not been spared either. But, we did see Safaricom take quite a hit yesterday, even as the MPs were discussing this in Parliament, right? At
Correct.
about 70 billion is what it went down by.
Correct.
Do you think that with the dividend tax at 5%, how are we going to see the investment industry affected?
Obviously, the people who, you have to remember our stock market, 70% of our stock market is foreign inflows. And that's money coming from the United States, from Europe, and this money has many other destinations it could easily go to. So if they see one particular country like Kenya making the cost of doing business very high, they can easily reallocate their portfolio and put it into another country, Morocco, Mauritius. Many other countries countries like Dubai, have a duty-free option. So we really have to think of what's the long term, what's the end game here? Because if the end game is attracting inflows, then this is not the way you go about doing it.
All right. Well, actually, the end game is to significantly, of course, the proposed budget cuts are supposed to help reduce our budget deficit. How significantly will these, in your opinion, do that?
This is the thing about increasing tax to raise revenue. It's a very misleading concept, because the idea is if you increase tax, you are going to raise more revenue. But what really happens is production starts becoming less and less. So as you're increasing, you're actually collecting a higher percentage, but of a lower output. And net, you'll find the money that you are raising last year and this year has actually remained the same, because the GDP has not grown fast enough. So I'm always for the idea that keep the taxes low, encourage the cake to become bigger and bigger. It's better to have a smaller percentage of a larger cake than a bigger percentage
of a
smaller cake.
Absolutely. Thank you so much, Ken Gishinga, for shedding light on some of the influences that this Finance Bill 2018 will have on a variety of people across all walks of life. And now I would, it's really exciting, because this week's Trading Bell, of course, we host Barclays Bank Kenya CEO Jeremy Awori. And here now is that particular interview. We did, our own Abby Agina did have that sit down with Jeremy, and we bring it to you on Business Today.